answering your questions about retirement. It's Money Talk with Michael Eastham.
We're selling a rental property. Should we do a 1031 exchange or cash out instead?
Whether you cash out of a rental property or you do a 1031 is always going to be an individual dependent question. And the reason I say that is because I talk to folks who love managing rental properties. And if you love managing rental properties and you're fine with it in retirement or as you approach retirement, then doing a 1031 exchange can allow you to continue managing rental properties and generating some really good retirement income. There are also some good tax benefits. You get write-offs from the property, you get depreciation, expense deduction, etc. So it can be a great tool. Now, for those who don't know what a 1031 exchange is, it is a tool that allows you to transition from one appreciated piece of property into another piece of property and avoid having to pay tax on capital gains. And capital gains is just the difference between what you sell the house for versus what you paid for it way back in the beginning. So the 1031 is a part of the IRS code that allows you to defer those gains. And certainly if you get out of the rental business, it can simplify your life, especially when you are stepping into retirement. But it also triggers taxes, those capital gains tax that I just mentioned. But you have to ask yourself the hard question. Do I want to be a rental property manager while I'm retired? Or do I want to offload that to a management company and pay them a fee, which lowers the amount of income that you're able to use towards your retirement budget? Or do I just want to get out of the rental business completely and simplify my life by taking that money and investing it in some passive investments? We talk about investing for income all the time. Interest, dividends. You could certainly invest in some publicly traded real estate investment trusts or some other types of bonds or bond-like instruments that generate income that's spendable for you. But do realize that if you find the ideal property and you love managing it, well, you're likely to be able to generate more income and have some additional tax benefits by doing the property yourself than you would if you took the money out, if you sold the property, paid the taxes, and then reinvested the remaining dollar amounts into passive income. Now, one other thing that's very important to take into consideration is maybe if you don't need the income and you just want to hold on to the property and then pass it on to your heirs, this can be a great opportunity for you because when you die, then you get something, your beneficiaries receive something called a stepped up basis. And that means that any capital gains that have been built up over the years that you've owned the property, they disappear. So that means it's a tax-free transfer to your beneficiaries. Now, there are a few quirks that you have to be aware of in order to make sure that it works right. But the bottom line is that can be great if you just plan to hold on to that property. Maybe that's a property that you have in the mountains or at the beach and you don't use it too often, but you just want to make sure that you leave something strong for your heirs. So lots of things to think about when you're considering exiting your rental business versus doing a 1031 exchange. Hope that's helped. If it does, then certainly give us a thumbs up. Share this with a friend who's nearing retirement and make sure that you subscribe so that you don't miss an episode of Money Talk. Thank you.